Hi, and welcome to Real Kadam podcast. Today we have our special guests, Isa Ибрагим and Уилл Биллингсли, who are co-founders of ApTap that aims to connect banks and merchants to meet their customer needs. Both of them are graduates of Imperial and football fans. Today we're going to talk about their journey in founding a fintech startup, how they think about co-founders and their journey in football and friendship, and how friendship and co-founder relationship can work together. Welcome, Isa and Will. Thank you for coming to our podcast.
Yeah, thank you for having us.
Thank you. Pleasure to be here.
Our podcast is called Real Kadam, which translates from Kazakh as real step. And the first question that we usually ask our guests is, what is real step or consistent steps that you have made in your life that made who you are right now here? It might be some consistent habits or one concrete step that you have done that shaped you here.
Yeah, I got actually asked a very similar question at a conference the other day. And I think Sam Altman's the founder of OpenAI speaks about this a lot and speaks really well on it. So I probably won't do it justice, but I think resilience is probably that kind of key trait and something that, reflecting on myself and probably Isa as well, that we both show quite a lot of most things you try probably aren't going to work when you're building a startup or just generally in life, right? And if you can continuously get back up and go at it again and come at it from a different angle, and you're just balancing that kind of, you don't want to make the same mistakes over and over and over again. You need to learn from those, but also, if something doesn't happen for you, like I said, being able to get back up and kind of attack the problem. So, ApTap's been around. It was our 6th birthday about a week ago. And startups, you don't get to 6 years if you don't have some form of resilience. I think that's been like the incremental or the kind of fundamental trait that we've shown. And then just like having some fun with it as well. Like, it's really easy to take yourself very, very seriously. And there are a lot of founders out there who will try and start a business and say, I'm going to change the world from day one. I think it's just realizing that change doesn't happen overnight. It's a step, right?
One thing that we had to get good at as well, and for me, what was kind of a big thing to implement throughout life is being, that Imperial really taught me more than anything is being able to not be afraid to start a daunting task, no matter how, big it seems or how hard the challenge looks ahead of you. I think that's something that we've always had between us, where we've been able to motivate ourselves to tackle, problems that most people would just turn around and go another way. And so I think combined with resilience, as Will spoke, that's really what helps us continue to drive forward, no matter what we face.
Yeah, makes sense. Talking about Imperial, you said that you started. We're curious, what is the journey behind you guys graduating from Imperial, not necessarily with computer science or finance, and starting financial tech company? Could you share a story of how you met at Imperial, I guess, and what Imperial played, and why did you study certain thing, but then applied it in completely different, seemingly different industry?
After you, Isa, I think you tell the story better than I do.
I'll tell how we met, and then you can go from there. So,
sure.
It was like a Saturday. Anyway, you don't start uni yet, but you're moving into halls. So I was moving into halls, and they encourage you to come in a few days early so you can meet kind of people in your year and make some friends and mingle and things. So I move into halls first day. I go into my room. I drop my bags. I didn't even unpack anything. I just look out the window, and I see a group of people playing football in the courtyard. So I'm like, okay, those look like people that I would get along with. So I just go downstairs straight away and I join the circle. And Will is one of the people in that circle. And I'm pretty sure I was probably standing next to him or near him, and then a few minutes later we're talking, and honestly from that day we've been friends since. Met him day one of Halls, and we've stayed in touch since, as you can see.
Yeah, probably escalated quite quickly on that Saturday night, to be honest. Maybe not one for the professionals in the room, but
and then football as well. I forget to mention, we ended up being on the same football team as well for Imperial, so we were playing for the twos in our first year, and we built a pretty good partnership on the pitch, if I may say so.
Like I said, I'm the workhorse and Isa's the finisher. So it was really nice to have that kind of connection off and on pitch, but doing totally different subjects. So kind of, really different perspectives on how to approach problems and challenges, and obviously very different backgrounds as well. And I think that's been crucial for ApTap's kind of growth and how we want to build out our team as well. I think we kind of represent between 8 and 12 different countries now in a team of like 14 people. So that's definitely been like fundamental for us. And I think that's something that Imperial kind of champions as well. It's a really, really international school, really promotes diversity of thought. And I think the point that Isa might have made around Imperial itself, it was kind of the fact that I was studying biology and Isa materials science and engineering. It wasn't irrelevant, obviously, but it was more about like, how do you start to teach yourself and how do you approach problems? And Imperial kind of teaches you to, or maybe forces you to find your way of problem solving. And candidly, I can say I was the biggest fan of that kind of method when I was in my first and second year. Probably, I think I started to appreciate it more as I, worked my way through the degree. But kind of as we came towards the end of university, or at least into our kind of final year, we were looking at and for those, if anyone's from Imperial listening to this, finance and computer science aren't the only two things you can do. There's so much more out there, and consulting, there's so much more than those three things. And then kind of ironically, we did fall into some sort of finance business somehow, but we were kind of just looking at like, what are the big problems out there in the world. I don't think either Isa or I or Nadal, their co-founder, really wanted to kind of work in corporate or work in a lab for the foreseeable future. And so we were looking at, what are the big challenges the world faces, whether that was like heart disease or power storage or green energy. And I think we cycled through so many of these things just sitting in Imperial's enterprise lab. And that was, one of the really good things about Imperial. It's got the resources. It's on you to go out and get them and leverage them in your favor, but they are there for the taking. And places like the enterprise lab were crucial for us to kind of call home base and start to build out just a way of working, not even an actual business at that point. And then we joined a couple of entrepreneurial groups in London and started to hear about the concept of open banking, and that's kind of what ApTap was born out of, which I'm sure we will dig into.
Yeah, it's interesting how this like initial connecting points led to the creation of startup, and I think we'll dig into how this idea came up. But before that, can you briefly, guys, explain what is the startup about, like for the guy who doesn't know about open banking and the kind of stuff?
Yeah, definitely. So what we're doing at ApTap is helping merchants connect with new and existing consumers through their banking apps. So we essentially help financial institutions build relationships with merchants. So that could be, an example is the relationship we've helped TSB Bank build with Sky, so that customers can now get exclusive deals, or they can switch their bills, they can renegotiate their bills, they can find rewards or discounts, they can cancel their services, all within the place they're currently managing their money. And how we got there was kind of triggered by open banking, which is a kind of evolution of some earlier regulation that was put in place while we were still in Europe, and then evolved into kind of PSD, or was PSD2, evolved into open banking in the UK. And that essentially says, as a consumer, if I give my consent, then a third party can access my bank account on my behalf. So Uwill Billingsley can say, I'm happy for ApTap to look at my transactions from Monzo, from Barclays, from wherever, and do with that, whatever the service is. In our case, it's help you find better deals on your bills. It could be a credit scoring thing. It could be, getting pre-approvals on a mortgage or a loan or whatever. And so we kind of looked at that and said, well, if we can use that transactional data or those transactional data to kind of build insights around someone's carbon footprint, then we should be able to help them take the actions they need to take to improve that. And that's kind of how we started the business initially. Very, very kind of consumer focused. And that was very much our core value proposition. So everything we've done and do kind of revolves around that sort of clarity and control for consumers. And things like GDPR, open banking, the consumer duty regulation that's come through kind of more recently sits quite nicely around that, and is pretty fundamental to how we're going to grow this business.
But under the hood, how does it work for the regular user? I don't know who's your client. Like, is it just a user, or is it developers, or just like the businesses who, shops or banks? Yeah,
so we've kind of got, I can talk to some of the kind of high level proposition stuff, and then maybe so you can talk to it a little bit more technically than I can. Essentially what we do is we break down our proposition into three kind of core pillars of product. The first is a dashboard we call Amplify, and that essentially we give to a bank, and they're able to say, I want to work with this brand, this brand, this brand. And that could be utilities, telecoms, subscriptions, insurance. We're kind of agnostic in that sense. And it's really this like partnerships platform for banks and merchants to be able to communicate with one another. So that's the bank's partnerships team, and that's the merchants partnerships team, and the product for them. We then have the kind of interface for the consumer. So essentially a white labeled or a branded up version of our interface goes to our banking clients. So someone like a TSB, if you're a TSB customer listening to this, you can go through their app and you'll find their marketplace and their rewards section, and you'll be able to switch bills, switch your broadband, energy, mobile. But that's our interface that you go to, and we can co-brand that. We can fully brand that as ours or the bank's. And so that second product is called Bridge. And so whatever changes you make on Amplify, the dashboard, are instantly reflected in that Bridge product. And then we have our third, kind of the most complex piece, is a product called Compass. And that essentially is the transactional analytics piece. So it parses transactions, understands what a customer is paying for, how much, how often, to whom, and in turn starts to understand whether that customer is in market for certain products or services, and then recommends them the best deals. Isa, if you could talk to kind of how that technically all comes together and works, I think that would be quite interesting.
Without giving away too much.
Yeah, no, I mean, so I think the power in what we do, number one, is that we split the offering that we provide. So our tech, we're built as a microservices architecture, and so banks can we have multiple layers of tech. So you have the algorithm, which is basically what ingests people's transactional data, understands your spending, and it first starts by organizing your bills. So it says, what bills do you pay for? So it looks for all recurring bills, anything that you pay for on a recurring basis. Then it says, it starts to build your budget and says, okay, in a month, how much do you roughly spend on bills that month? So what payments should you expect, and when should you expect those payments? So we can inform our customers about how much they should expect to spend in a month. and when they should expect those payments to be coming out. And then from there, we start to understand what the user likes. So what services does he like, how, and his spending patterns. And then we can apply that to start offering him, deals. And so the other parts of the technology, you have our broadband service, you have energy, you have insurance coming in, you have subscriptions. So those microservices then can inform about the deals in those different industries that are relevant to the customer. And so then we have kind of our AI and machine learning stuff that we do where our data scientist, Jamie, who we also met at Imperial, and he helps us build really smart recommendation models that basically take into account user interaction, their kind of financial trends, and also what's available on the market. And then it says, okay, what's best for this customer at this point in time. And also it predicts when a customer is in market. So, for example, in broadband, I can try and sell you broadband deals all I like, but if you've just signed a new contract, it's going to cost you a lot to switch over to a new provider. So we also have an in-market prediction engine, which predicts when a customer is in market, either for broadband or energy or due for another service. Let's say the price of a service hikes up. That's usually an indication that there's room for the customer to change over and optimize his spending there. And then the other parts of the technology, apart from the back end, is how we integrate into banks, obviously. So we offer APIs, so purely API-based integration opportunities where the bank can fully control the user interface and build out journeys for these different partners and suppliers. And as Will already mentioned, Amplify, they can connect through Amplify and control what partners are available through the APIs with a simple dashboard. So even if the developers do the API implementation, your non-tech people can actually control what services and deals are shown to the users. Then we also have a kind of less development intensive integration method which is called Bridge, that Will mentioned. And that is basically a front end we provide that you can customize. So, change colors, fonts, etc. Simple customizations. And we provide your front end. You can do simple customizations and then you plug that right into whatever banking app or platform you have and enable those journeys to the partners that you want to have. So you can say, okay, I want to have some broadband providers and some subscription providers, and that will immediately be available in your kind of UI that you can either throw in via an iframe. So it's a very, very quick integration that you can get up and running in as quick as a week. Or we have deeper levels of integration, as I said, using that iframe or going purely via APIs.
Essentially, it's the full stack. So we're trying to do a full stack next generation affiliate journey. So someone who wants to publish deals can come in, find partners, partner up with them, negotiate exclusive deals, push it straight to their customers through an interface that they can just almost drag and drop and build, and then track how all of that is going. And then over time, they can optimize based on the data that we're able to, the insights that we're able to garner off of those data. And so, Isa's talked to each of those, but it's really then a question of how that all comes together. And I think open data, which is why open banking and GDPR and things are so important to us. Open data kind of lies at the core of everything that we're trying to do.
Makes sense. So if I just to recap, if I understand correctly, the Amplify and Bridge, it's for businesses to connect with businesses like really easy, right? And the Compass is for a regular user like me. I can just download it, and it will suggest me how can I spend my money better, right?
Yeah. So all kind of three of those products we're selling as software licenses, essentially, to banks or to whoever wants to use them, right? Mostly our clients are financial institutions. It's then a question of what does the user see? So you've got kind of these tiers, right? And the way we look at our stakeholders is you've got consumers, you've got merchants, and you've got banks, and you can kind of think of them in a triangle. And today a user has a relationship with their bank, a user has a relationship with their merchant, but that bank-merchant relationship beyond payments at the moment doesn't really exist. There's no conversation kind of through the lens or through the context of a customer going on. And so that's what we're trying to build, essentially, are the three sides to that triangle and the connectivity between each of those. And that means you can kind of get a flywheel spinning through those three kind of core stakeholders. And so a consumer, to your point, they can go into their banking app. They don't need to download a new app or connect accounts. They can go into their existing banking app and they can see, this is what I'm spending my money on. I could be saving £300 on a broadband bill. You know, we've done that kind of legwork for them. We've even found them the best deals for them, and they can switch or they can cancel, or they can sign up to a new thing. And so that's the kind of element of clarity and control from a consumer, but then the bank is reaping the rewards for that, right? That's increased engagement, it's increased revenue, it's new revenue streams, as well as the ability to upsell. So for example, let's say you're a TSB, let's go back to TSB, so already spoken about them. A TSB banking customer, you go in, you save £300 on a year on your broadband switch. What do you do with that £300 now? And so what TSB could say is, hey, why don't you open a savings account with us? And you know, you might name that savings account and call it a new kitchen. And so once you've hit a kind of threshold in that, TSB might come back and say, hey, we've seen we know how you're budgeting your money. We've seen regular income. We've pre-authorized you for a loan. And we will finance that new kitchen that you're saving for. And so that kind of closes the loop and brings the ecosystem together. But then it's a question of like, who's installing that kitchen, or who's selling you those solar panels that you want to put in, or whatever that is. And that's where merchants can come back in as well. So you've got then channels, which is what the bank is, right, to a consumer for these merchants. And that's what's really important, that we're finding is really important for them. And just to tease that apart a little bit. So today, obviously digital advertising is incredibly important and getting more and more kind of competitive. And so we saw, Google's CPM, like cost per mil, costs went up like 75% year on year. Meta's, maybe I should be careful with this one, Meta's advertising costs went up 60% year on year over the past year or so. And so it's a question for brands, whether that's a subscription provider or a telecoms provider or whoever. It's a question for them of like, how do we find new channels into both new and existing customers? And we think banks are a really, really untapped but incredibly data-rich way of doing that. And so you can think of, in kind of ApTap scenario, a bank is a channel into a customer. We are just facilitating actions for that customer and that brand and those interactions that are happening. But the bank needs an incentive to do that, and that's where the kind of revenue and the engagement piece comes in. So trying to add value at each kind of step in that, or each point in that triangle, without necessarily having to do all the hand-holding and building a huge consumer base, which we've seen, other personal financial management tools really struggle with in the UK.
And just to clarify that as a user, we do have an app you can download that kind of has its own, that has all that functionality that we mentioned, the transactional analytics, helping you budget, all that kind of stuff, and then switching services. But to Will's point, in the bridge product is what a user sees, a user of a bank would see. So when we sell a bridge product to a bank, they would have a button in their banking app that says switch your broadband or switch your energy, which would then take you to an iframe that is controlled by us, which is the bridge product that allows them to switch between providers. So as a user, there are different ways you would interact with us, either through our app, or if we are integrated with your bank, we could be scattered throughout the application. For example, let's say in the transaction screen, you might be in your transaction screen and it might just flag saying, hey, your mobile bill went up. And then it'd say you can switch and save, and that would be us. So it really depends on how we integrate with a certain bank. But as a customer, we try and, we have many ways of interacting with the customer. So, yeah.
So there are two basic sections, which is Amplify and Bridge, which is more making relationships with banks and enterprises. And I'm curious, how do you go about it? Because essentially, from what I understand, your competitive advantage over here is you have a lot of enterprises that you have aggregated together, right? And you are making deals with banks to just ensure that there is enough customers that you have that you can recommend based on transactions. Because even if you analyze a lot of transactions based on Compass and you don't have, for instance, a subscription service, right? Like, what would you really suggest, right? So how do you go about actually fulfilling this inventory inside your aggregator, essentially? And what are the tips and tricks for anyone who is thinking about startups that would work with both enterprises and huge banks with a lot of legacy stuff?
First thing I say is good luck, because it is really, really difficult. And so I think when we were chatting before we started recording, Isa mentioned that kind of in our early days, he said, I'm going to be the tech guy, and went down the kind of coding route. And in that same conversation, I kind of said, well, I'm going to be the sales guy, and getting the banks is, that would be my responsibility. So needless to say, obviously kind of everyone gets involved in that process, and having someone like Isa who's technically savvy but also really good in front of people to get, the internal kind of conversations at big financial institutions or big merchants rolling is always going to be really useful. I definitely think that that's where a lot of, not just startups, but enterprise sales in general, that's where a lot of companies will struggle, is when you get to the kind of more technical conversations and you've either got a salesperson who doesn't know their product well enough, or you've got a technical person who doesn't know how to speak to a commercial conversation, which I think we've been quite lucky to kind of strike that balance quite well. Also just lots of testing and learning, like I said, right? We've been doing this for a few years now, and we have signed kind of 4 of the largest banks in Europe, and it's about 60 odd merchants across utilities and telecoms and subscriptions so far, and a few insurance providers. So, definitely not an easy game. And it's been, to your point, really a chicken and egg, right? Like, I go to a bank on day 0 and I say, I want to help you sell broadband. And they say, okay, who do you have on board? And we say, well, no one. So they say, well, go and get some broadband providers and then we can talk about it. So we go back to, you go to Virgin, Vodafone, whoever, and you say, hey, I've been chatting to a bank, can't tell you who because everything's NDA'd, obviously. Are you willing to kind of take a leap of faith? And you just gotta, there's no secret sauce, right? Like, it's finding people who believe in what you're doing. It's trying to articulate that vision, that mission quite clearly, so that, you might get 1 or 2 people at these brands or at these banks who just say, you know what, we think it's a cool idea, let's give it a whirl. And that's what happened with TSB. Credit to them, all the way up through senior leadership. Early on, took a punt on a startup of 4 people at the time. But the same goes for the Virgins and the Skies of the world. I'm not explicitly naming them, but those two have been very good to us, and that's allowed us to then get a couple of like more exclusive or bespoke deals in place, and then we can take that back to someone like a TSB. I mentioned earlier that TSB Sky relationship that we'd helped set up, and that went really, really well in kind of the first instance, and we've just tried to build on that. And so, you know, once the first one goes, the second one becomes slightly easier. Then you get the third, then you get the fourth, and now you start to collate a lot more data. And Isa mentioned we'd gone and built our own mobile application, and you know, a lot of people told us, a lot of advisors said, like, focus on just doing the one thing and doing it really well. And I don't want to discredit that advice, because usually it's probably pretty good advice. But in our case, when we didn't have any live clients, being able to pull up an app that we'd built and said, everything that's running here, we've built, and it's available to license and that you can use, just changed it. Like, when you can put a physical product in front of somebody and they can poke around and they can press buttons and they can see. And so that's actually how we started with TSB. We started by rolling out to staff first. So they're employees at TSB. And we saved some people some, you know, decent money, hundreds of pounds here or there. And then we started to get staff members who were like, hey, this is actually really cool. Maybe we could get it in front of customers. And lo and behold, before we'd even finished our pilot, we were rolling out to real live TSB customers. And a part of it is just selling the dream as well. So there's no secret sauce to it. I think people undervalue what it means just to be a normal person, like being that pushy salesman who's built an automation in your CRM to email 100 people a week isn't the way you're going to get sales done in the early days. Maybe once you've got a fully fledged product that you can automate that outreach, sure. But if you're a startup, if you're just getting started or scaling up, we think and continue to think, we've thought and continue to think that it's really important that, you know, Isa and myself and some of our kind of senior leadership team internally are involved in those conversations. I think the final thing I would say on that is that we just keep talking to customers. So yes, obviously we talked about how we license our software B2B, but the consumer is the one who's really kind of, you know, there's a very tangible benefit for them. We still to this day call customers and have conversations with them and say, hey, what's working for you and what's not, and how would you change it? What brands would you like to see? Is there anything we're missing? And just so trying to keep your kind of ear to the ground on that one is, I think, been really important as well.
I'm curious about the more transactional analysis part in particular, because essentially that's what you're using as a signal for your ads or like in general selling of certain services, right? And unlike social media where there is a lot of data, right, or like where there is a lot of actions per day that user takes, usually transactional data is kind of poor, right? Like, of course, people do potentially, I don't know, 10 transactions a week or like a lot of microtransactions and certain bills that come only once a month. I'm curious, how do you, like, what is the value of actual transactional data? Because all the ML models at the end, however strong they might be, they depend on data, right? And how you train, and how you do matching service essentially with the partners that you've aligned. How do you ensure that you have as much signal as possible to improve your system and to actually make it personalized?
I'd answer this in multiple steps, and it depends what you want to do with the data. So the first thing that we started with was subscription detection. How can we detect accurately what recurring payments that you have in your bank account? And this was a problem that many have tried to solve. And I can say we probably have one of the best solutions in the UK because most people focus on categorizing transactions. So a lot of the machine learning models out there and the majority of the research goes into being able to accurately categorize what every transaction is. We were not bothered about the category of a transaction. We just cared, does this recur? Is this paid on a recurring basis? Is this something that is a fixed thing in the user's life that he has to pay for on a regular basis? And because we had simplified our problem down to that, building, our data scientist he's got a maths degree, so building some formulas to help extract that information and then applying some models on top of that, we found was a really, really effective method to accurately pick up these recurring payments. But to your point, obviously there's still there's obviously still some error, but we've been able to really fine-tune it to a very high level of accuracy because of focusing on just recurring payments and not the whole categorization problem. But then I think the categorization problem becomes more pertinent when you want to recommend products to customers. So obviously you've got to understand, okay, what category products does he even use? So I can recommend relevant products that are in the same category and do the same thing. And with that, I think we started off at first, in terms of helping us out, starting off with a fixed number of providers and suppliers was really helpful. So being able to collate our own data where we would, at first actually we went out, got the data, and then we used script scrapers to help us to update that data and keep that data live and keep a historical collection of kind of deals and their pricing, etc., etc. Not just deals, but also transactions. And we had to do labeling. We've done a lot of labeling. So we had a good user base of a couple thousand users. We were then able to label ourselves in the team. We had team labeling sessions. We've also used, outsourced labeling, companies and things like that. Obviously, AWS has its own. We've used that as well. So we've labeled data to help us enrich that data and train models. We've then also started bringing in data from other sources. So I'll give you just an example of broadband. In broadband, we might be able to see in your transactions that you are paying BT or EE, but we don't know for sure if that is a mobile phone or a broadband deal. But what we can do is use other data sources that we have. For example, your geolocation data, and we also get data about your house from other third-party companies. And that actually helps us sometimes identify what network you're connected from. So if we can see, he's paying for BT, he's connected through a BT network, okay, he most likely uses BT for broadband, and that BT payment we're seeing is probably broadband. We can then see housing data and say, okay, it looks like his house, he has this many rooms and this many people in the house. And therefore you can start to build a better picture of the user by collecting other data points. But also, the best thing is user input. We have a lot of, throughout the app, we don't try and collect a bunch of information at once, but we ask, we drip out things and collect feedback from the user throughout the app. So for example, if we have a subscription that we're expecting a payment for and we don't see one, we ask the user, is this, we notice that there's a transaction missing. Is this a missed payment, or are you going to pay this in the future, or is there something we've got wrong? And those kind of constant feedback loops from the user can constantly improve our algorithms and things like that. So I'd say we've learned to have to focus in terms of tackling one problem very well and not trying to solve for all. And then, we're trying to collect data, a lot of data that is relevant to our industry through scrapers as well, that help us build our own unique library of data that no one else has access to, that help us just be better at what we do. So, a bit of a long-winded answer, but I'll stop there.
That's really cool, Isa. Actually, this experience of yours with building scrapers and stuff is so resonating, because prior to my current job, I actually worked at a YC fintech startup called Duppy, where essentially I was also responsible for building various scrapers, browser scrapers that would go in and emulate you entering into bank and stuff. There was more bank transaction and transfer payment. And in general, I'm very curious in fintech sphere And I was just like the fintech that I worked had both services, like data analytics that you guys are offering more or less, right? And like some sort of suggestions based on that, and then transfer, where you actually play with money, not play, but like you essentially make it easier to transfer, not on like Visa or MasterCard rails, but like on bank to bank rails, which is super cheap, right? And essentially there I just understood, I don't know whether it's a wrong understanding of mine, but a lot more money flows in the transfer space where you as a third party service are able to touch the money and somehow store in between or take certain percentage of money. That's what gives certain sense of competitive advantage, while data analytic tools and like in general suggestions are a bit less, they have less competitive advantage, since especially right now with LLMs and all these kind of models, every single bank, I assume, can also build certain relationships and go direct to the customers, right? Because they might be paying a lot to their customers. Like, and I'm just wondering, how are you thinking about your competitive advantage in this sphere, given that the main services, as far as I understood, you provide this more like data analytics and matching services based on data analytics, right, of the user behavior?
Yeah, I think that's a really good insight. And, you know, anecdotally, we've seen the likes of Plaid and TrueLayer and Token and so on really kind of shift focus more to payments than anything. But, you know, and there's been some cool acquisitions in the space as well, like GoCardless bought Nordigan. Obviously, the whole Visa Plaid thing didn't quite work out, but then Visa and Tink teamed up. So, like, I do think there's a lot of just intrinsic value in the data analytics and being able to do it well. And to Isa's point, that we focused in on our niche as opposed to trying to do all of whatever you would call transactional analytics, whatever that could be, which is quite a lot. So when we think about our kind of USPs or our competitive advantage, it's more around kind of going back to that like full stack piece. We're trying to own that infrastructure end to end so that we become this like one-stop shop, whether you're a merchant, whether you're a bank, whether you're a user or a consumer. Irrelevant's the wrong word, right? But we're kind of agnostic in that sense. We're just the network that people are plugging into to make that happen. So, Google have gone and built their own ads engine. Facebook have built their own, Meta have built their own ads engine. But can we be the engine that gives brands access to all banks, as opposed to just Barclays building their own thing and TSB and NatWest and Santander and blah, 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 300 plus financial institutions in the UK alone. That's just too much legwork, and it's not a core value proposition for financial institutions. It's very much a value-added service. And so we want to be that kind of technical service provider for them. And that gives us then the opportunity to go out, obviously build our own relationships with merchants, but also leverage the bank's relationships with merchants. So, for example, I don't know if this is real or not, but like BT might bank with Barclays. And so a Barclays BT relationship, like if Barclays can go back to BT and say, hey, you're storing your money with us, we can actually help you sell products as well, which means more money in your accounts, which means more money in our accounts that we can lend at better rates, which means customers are more likely to spend more money, which means more money in your merchant account, right? And that's the flywheel we're trying to get spinning. And so competitive advantage is that we've spent a lot of time building the connectivity, both commercially and technically is both the actual like API piece as well as the intelligence of the analytics layers. Now, payments, I think, is a really, really interesting, that says everything about me, is a really interesting space. But not something that we've kind of delved into too much, because I think there are some really interesting or really strong players in the space who've, bank-to-bank payments. There's only so much you can actually do with that from a technical perspective. It's more about the experience and how streamlined that is. Like, you're not going to Amazon to go through a transaction. You're going to Amazon to buy the pair of socks or whatever that you need. And that should be the same, right? But if you're transacting through your bank, that should be completely frictionless. The only friction that's in there should be like positive friction, I guess, or hurdles that just say, are you sure? Or inform you of the decisions that you're making. And so when Isa talks about like the different data sets that we're able to pull together, I think that's quite a cool piece, right? So we can say, hey, we know you're using this much of your energy. There's some cool businesses out there who are using like smart meter data. You should be, looking at buying a new fridge, and then can we facilitate that? And you might need a financing option because a new fridge is like £3,000 or whatever, and maybe you don't have that, and you can do a BNPL or a typical credit style transaction, and maybe there's a rewards piece on that. And so, Currys will say, hey, I'll give you 10% cash back on this, and there's this whole ecosystem play. And it's maybe a bit of a cop out, but that's the USP. And I think that's why we always kind of preach patience in this space, is that like this doesn't happen overnight, because it's a fundamental shift in the kind of framing of how affiliates should work. Because today an affiliate is, I'm an Instagram influencer, I want to sell, I don't know, protein, so I'm going to go on an affiliate network, pull a link, put it in my link tree on Instagram, and hope that people convert. Whereas like if you could give them that journey end to end, enable them to use the data that they're collecting on customers with consent, and push that back to brands to help them optimize products and services, then you're starting to, add value at each step. And I think that kind of commercially into the stuff Isa was talking about in his last point, that's the really kind of the part we have to tiptoe around and be careful with financial institutions. When you're talking about ad inventory, we can't speak like that. It's bespoke offerings for customers based on their financial position, and so we cannot advertise. It's more about doing the right thing for the customer at the right time with the right products and services, which are, you're towing a line, but they're very similar. In fact, I think there's some fundamental differences.
Yeah, and just to add on, I think Will's point about the data, in the sense that what makes it unique is that when you combine fragmented data sources, you then start to get a better picture of the user. So I'll just give you one quick example. That, for example, you switch from BT to Sky, but all BT know is that they lost a customer to Sky. What we can see is that this customer has switched with us from BT to Sky. He was paying this much with BT. He's now paying this much with Sky. He's actually not just switched to Sky, but he also has Sky Sports. And the main motivation for his switch was because he actually wanted to, he likes sports and he wanted to bundle something in. But BT would never know this kind of information. They'd only see that, he's left us to go to Sky. And so we can enrich the information that they get, and therefore help understand their customers better and help them keep customers. And also by helping them understand why people are leaving, they can better understand how to keep them as well. So you can start to tell them these insights that they would never have had access to without combining the different data sources.
Wow, that's cool. So, for me, it seems like you have really like insightful, different kind of data, and you like influence businesses, banks in different ways with different kind of recommendations stuff. And then when you were talking about the ads, like that you like compete probably in like the in ads dimension with like Google, Facebook, you also recommend something, you also recommend like changing to some service or something. I'm curious for the regular customer's life, how do you have any kind of measurements on the impact you have on the customer's life? Because usually the ads business is more about like spending more money. So ads business, like you recommend something and the people spend more money, and that's how it's measured. How is it successful? And in your case, is it really about spending more money or like saving more money, or it's more about like recommending more things and spending more money?
That's a great question. And I think this is where context is really important, because if I've got I don't know, I'm a customer and I'm maybe on universal credit, or I'm on a low income job, or I've got 2 jobs because I'm trying to make ends meet. That's going to be very different to someone who's, let's say, upper middle class and might be looking for a new product or service. So I think that context, and when we're talking about transactional analytics, it's not just the things that are going out, it's the things that are, it's the cash that's coming in as well. I think that kind of sets the scene. So, KPIs that we have with our partners and our financial institutions are, on the merchant side, it's usually going to be number of transactions, but on the bank side, yeah, you're totally right. It might be like can we hit an average savings figure of this? But that's not always the primary prerogative. So when we're our broadband journey is a good example of this. So the first 2 categories, we basically put 5 deals in front of a customer that we think are best suited to them, and usually that's best value or highest savings, and then kind of different speed categories. So let's say 50 megabytes per second, or 100 or 500 or a gigabyte. The kind of percentage split is quite interesting. It's pretty even between a quick and a best value, and then the others are more niche, and we need to go and do some more of that analytics. But I could probably bet that, and I don't have the numbers off the top of my head, but I could probably bet that the ones who are looking at the gigabyte per second internet speed category are probably the ones who aren't on the kind of universal credit or the lower income payroll. But everyone's kind of, I think, weirdly, the trend we've seen is people are after a good deal and a fair deal, as opposed to constantly pinching every penny. And you're going to have some people like that. A certain percentage of the population is going to say, I want to save as much as humanly possible. I'd rather have slower internet and save £200 than have slightly faster internet and save £170. And to each their own, right? And we want to enable that. So it's a tough balance to strike, I suppose. And so we always kind of err on the side of understanding what exactly it is the bank wants and what kind of validation they've done with their customer. And Isa mentioned that we kind of drip questions throughout our journeys as well. So we can ask that customer, what are you looking for? Are you looking for a faster internet or provider, or are you looking to save some money, or is it a little bit of both? And do we need to strike that balance? And so that means we can boil our KPIs down to, revenue targets, and which is essentially transactions. And then it's a question of how does your business model work? So right now we're licensing the software to financial institutions and taking a share of the commission that comes from a merchant, i.e., let's say Isa switches from BT to Vodafone. Vodafone pays us a commission of, let's say, £50 for the sake of argument, and we would share that with the bank, who, the channel. But I think longer term, and that's how the big price comparison websites work today. But longer term, we kind of want to break that and rejig it and say, well, if we can align bank and merchant incentives better, where it's not a constant game of acquisition and churn, where you're having the conversation of engagement and retention as well as acquisition and churn, because it's a natural thing, then we can start to charge on transactions. To your point earlier around payments being a really integral piece to this, you can start to charge on the insights, the data that comes off the back of that. You've then given banks an opportunity to monetize data in a way that they haven't been able to before, because it is actually helping their customers, not hindering them. And Cambridge Analytica, the Meta stuff is all over the news. If a financial institution is, let's say, caught selling personal data to brands to try and force more transactions, that's not a good look. But if it's, hey, we've been able to inform the market on what British consumers need or global consumers need and deliver that to our customers, it's a totally different narrative with what is in essence the same kind of infrastructure. So yeah, it's we've got a fine line to toe, I think, in that regard.
Nice. Yeah, makes sense. Thanks. Yeah, when you guys were talking about like how like different stages of different iterations on how do you build your service, and like at the beginning you were going back and forth between like the providers and the banks and so on. I'm curious, at the beginning, how did you raise money, or did you fund your initial work by your co-founders, by yourself?
Yeah, raising money is such an interesting question, such a strange challenge at the early stages, and yeah, if you ask me, would I do it the same way again? Probably not. And like we've raised just over £2 million to date for the business. We've done that largely in kind of chunks of funding as opposed to, a lump sum. And in the early days, we had co-founders and family and a kind of early angel who just really believed in what we were doing. So, we kind of talked about the story initially. Isa and I met, and a third co-founder, Nadal, met at university. As we came out of that, Imperial actually sponsored the Isa and Nadal's entrepreneurs visas. And I think it was just like that. There was a certain element of validation in that got other people comfortable with the fact that they're putting, might be putting money behind what we're doing. My family and myself were in no position to kind of put cash on the table, but what I can do is put the hours in. And I think, it's blood, sweat and tears that founders can invest the most. Yeah. And so, we kind of just graphed. You talk to hundreds, if not thousands of people, and you're constantly pitching the idea. And the game, both from fundraising and partnerships and sales, is how do you make it as easy as possible for the person on the other side of the table to do the deal, shake your hand, or give you money, essentially. And so with banks, that's been breaking up our product suite and making it easy to integrate. With partners, a similar thing. With investors, it's traction. And so, the first couple of investments or tickets that came into the business were based on conversations and prototypes and consumer interviews. And then it was suddenly starting to see some transactions and some appetite from financial institutions. Then it was, well, we've signed these banks now and we're moving forward. And now it's, we're launching four of Europe's biggest, or live and or launching four of Europe's biggest banks. What comes next, sort of thing. And so you're kind of always telling the story about how you've used money wisely or not, I guess, and what mistakes you've made and how you're not going to make them again. And I think it all kind of comes back to resilience at the stage we're at. And I think this, it does change as you get bigger and bigger and grow as a business. But the stage you're at, investors are investing in founders and the founding team, or the people that we surround ourselves with. And so we've tried to nurture kind of that relationship, not only between ourselves and our investors, but also our team and investors. So there's a real kind of like personal connection as much as there is like a business incentive to do that. And it just makes it a little bit more real. I said this a little bit earlier, but just like people like doing business with other, normal, nice people that they get along with. And if you can facilitate that, make that as easy as possible and show them, the proof is in the pudding. We've raised 500K and we're going to do this, this, and this. And then you turn around in 6 months, 12 months or whatever, and you say, look, this is how we used the 500. We actually achieved X and Y, but Z failed, and this is why. And this is what we're going to do differently with the next tranche of funding. And so, we've always tried to take that kind of hypothesis-driven approach, I suppose. And maybe that's been born out of our degrees, STEM degrees. But so far, it's worked. And like I said at the beginning of this spiel, I'm not sure I would do it the same way again, because now we have the knowledge. But if we were starting day one with none of that knowledge, it's brought us on that journey, and I don't think we would have made the same learnings. So giving Isa and I £2 million 6 years ago and saying, here you go, off you go, I don't think we'd be where we are today, as much as I would have liked that. However, if you gave us £2 million today, with the learnings we have and the traction that we've gotten, I think we'd do a lot more. And for what it's worth, we are out fundraising. So if anyone's watching this and thinking, hey, that's a cool business, do come and chat to me. Shameless self-promotion, for why not?
Got to mention grants as well.
Yeah.
We have won an Innovate UK grant, which the government sponsors you to do a project, and obviously that project is related to your business. And so it was great to be able to get that grant of about 250k roughly. So that's equity-free grant money, which is always great for any startup. Try and get as many grants as you can, and it's also a stamp of credibility, of course, because getting those grants are not easy. So yeah.
Neither of those things either, like the investor outreach, like equity fundraising or grant fundraising, both are just boring. Like, they are not fun jobs, right? It's just work that you have to put in. It's not particularly glamorous. It's testing and learning. Like, this piece of messaging worked here, but it didn't work here. Here's why. And sending hundreds, if not thousands, of emails. So, if you're not, this is where the resilience comes in. And I think because we were inexperienced and quite naive at the beginning of the journey, we just did that. Like, we weren't even thinking, what if we annoy people, or what if we don't get money? It was just like, great. If we do, we do, and we can plow on. I think as we've grown, that's kind of changed a little bit because we have more responsibilities. We have a foundation to our business, and we don't want to lose that. So there's more inherent risk, but there's also like a team of people who have mouths to feed, food they want to put on the table for their families or wherever or whoever. And as much as you want to think about that, you can't let that affect how you approach your fundraising. It needs to be, this is what's in the best interest of the business and how we're going to go about it. And I think we've seen a lot of that, like over the last 6 to 12 months. A lot of startups have died, right? And a lot of big businesses have cut their headcount massively, and this is exactly why. It's definitely, if you're a founder who's starting and thinking, first thing I'm doing is raising money, I think take a step back, take a deep breath, try and map out how you hit that next traction point, bootstrapped, because in this environment, especially, we're not kind of 2-3 years ago where VCs were throwing £10 million at something at pre-seed and hoping for the best. It's in this environment, showing that traction, showing that you can do that with limited resources, I think is more valuable than ever.
I'm curious, are you sustainable right now? Or do you still depend on investments? If you were not to grow your team size, would you be able to sustain yourself?
Probably this year we will be. So not quite yet, and thankfully we've got some really strong investors who really believe in the business, and when you need that bridge or that extra kind of couple of months, they've come through in the past, and obviously hopefully we'll continue to do so moving forward. But again, it's been about like putting ourselves in the position where we'll hit the next milestone. I think we're quite confident and really excited about 2024 being that kind of inflection point. So if we weren't to grow out our team any further, which we probably do want to do, especially later on, kind of post-summer, then yes, we could be a sustainable business. But do we want to be, I guess, is the next question. If we get to a point where you're kind of breaking even at a certain run rate, then ideally we're reinvesting that and we're saying, hey, bank partner, hey, TSB, we work with BNP Paribas as well, huge international bank. Let's go to France, let's go to Italy, let's go to the US, let's go to Australasia. We had a little chat before we started recording as well about Nigeria being an incredibly exciting market. There's so many opportunities for the kind of infrastructure that we're laying down. And the reason we've chosen banks as a channel is because of the data that we've just had the discussion on, but the kind of global breadth and the scope of their customer bases that come together. So now between our kind of 4 major clients, we've got access to about 44 million customers in the UK. And so that, the leverage that you get with brands, that conversation totally changes, and then your funding conversation totally changes, and how you reinvest that money is like, it's all intrinsically related.
I had a question. You said that you were raising money like in chunks, not like in big rounds. Does it usually mean that like you end up having less share than if you were raising money in big rounds?
It depends. I think that's kind of circumstantial. If you raised 10 million on a pre-seed versus you raised 10 million over the course of 3 rounds, in theory, your pre-seed could be a really low valuation or it could be a really high valuation. That's going to set a bar somewhere. So I think that's such a case-by-case question. Probably, I would argue, knowing our circumstances and knowing kind of others who have done similar and spent a lot of time on things like PitchBook and Bohurst and so on. I'd imagine those who are doing more rounds are just statistically going to be more diluted. But I think the bigger detriment in my mind is more the time spent. So, it's not an easy game, as I said, and it's a lot of just man hours. Like the actual job day-to-day of fundraising is mostly just sending emails. Until you actually get those calls, you are just a kind of business development rep who's just pumping emails out trying to get calls. And if you're doing that every 6 months instead of building the company and building the product and actually selling to clients, then are you really spending your time in the best way? Which again is just why I talk about kind of, if you're an early founder looking at fundraising, think about where your time is actually best spent and how you spend your money, limited resources. But yes, I think you're probably right. Like most businesses who fundraise more are going to be more diluted. And I think if you get the right investors in the room or around the table, they'll understand that, and there are ways of combating that, share options and milestones and that sort of thing that you can say, well, we're going to unlock this sort of value at this point. Secondaries, are always an option as well. Or do you want to have some of your early investors sell shares instead of creating new shares on the next investment, that sort of thing. So, you'll get angels who come in really early with a 10K, 15K, 20K check or whatever it is. And when you're raising 5-10 million in the future, they've made their returns, and if they can exit, and everyone's kind of a winner. So there's a few ways of playing it, which you're not going to end up as diluted as you could. But I would definitely throw caution to the wind and say, look, no, I wouldn't. I'd throw caution out there and say, be careful about doing lots and lots of tranches, because you will just spend a lot of time more than anything on that.
Yes, thank you. Yeah, makes sense. So if we speak about the future, what are the startups' next big challenges?
It's a timely question, I guess, for us, because the last year and a half has very much been about putting ourselves, we had good foundational product, but it wasn't ready to sell and scale properly. And today where we're at is, we are ready to do that. And so there's quite a clear cut process or series of things that need to happen for us to be successful. And so it's actually quite a nice place to be for once as a founder, as CEO and CTO, where you have to direct your team. It's not kind of shooting in the dark so much as we know we need to get good deals from brands. We know we need to maximize the number of customers that come in at the top of our funnel. And our big target's revenue. So all focuses on that. So that's 2024 really, and there are nuances to that and details that, you know, Isa's got lots to do on product side, I've got lots to do on partnership side, which I'm happy to talk to if you have specific questions on that. But yeah, overarching picture is like, let's really attack this and let's make some money.
Is it right? Well, sorry, go ahead, Isa.
No, I just wanted to ask if your question was kind of only about 2024 or kind of our vision for the company going forward.
Yeah, I think it's like the vision for the company.
Well, do you want to finish off before I interject? I mean, we'll say the same thing anyway, so go on.
Yeah, I mean, again, it depends probably on the success of the next 12 to 24 months. I think we've put ourselves in quite a nice position where we're probably quite an attractive proposition to acquire for some of these big kind of comparison engines or affiliate networks, because of the relationships we've built on both sides, as well as the tech and the insights. And so we're not kind of ignoring that an exit is an option, but we are quite excited by the prospect of being able to scale something beyond where it is today. And I think Isa and I have been quite aligned on this in the past, and hopefully moving forward, which is, if the business were to stagnate and we were to say, you know, you asked earlier, could we break even or could we be a sustainable business? If it was to kind of level out and stay on an even keel, it's probably not what really excites us. We want to be growing and learning new things. And so if there's that challenge, that constant kind of opportunity to learn and try new things, and, you know, it's a very real a very real, not opportunity is the wrong word, real chance that we could fail, but also a real chance that we could succeed and grow, then I think we'd like to take that. Whether this is an IPO business, probably not, just given kind of where our head's at and what we want to do in the future. We mentioned Nadal, our other co-founder, he kind of stepped back from the business a little while ago to focus on what he was really passionate about, which is more the green energy space. And I'm sure, you know, Isa and I would like to get back to our kind of science roots over the course of our lives at some point. But, you know, we're still young, relatively speaking. Got plenty of time to do new things. So I think, you know, ApTap deserves the energy, all the energy we can give it for the coming years. And if that means scaling it, then that's exciting, right? And I think, yeah, we've mentioned a few places already: Europe, US, Middle East, the world, basically. All cool places to be and see, and I wouldn't mind doing some more traveling. So why not? I don't know, Isa, if that aligns with you. Maybe not the time to have an argument on a camera if it doesn't align.
Definitely, I totally agree. I think we both align in this category. It would be, you know, we don't want to see this stagnate, but it would also be super cool to scale this worldwide and achieve what we call your what is it? Your iTunes for subscriptions, your App Store for services that is available all around the world, that people can go and browse their, you know, new products and switch to products as simple as downloading an app. You don't have to fill in any information. We hold all the data, and so we, you know, becoming a free data flowing hub would be an awesome place to be as a company, and I think very powerful as well to those points. So.
Yeah, so essentially what you're saying, before it was you guys going 0 to 1, and now it's 1 to 100 potentially, since you have some sort of traction.
Let's hope so. I think, you know, the classic crossing the chasm book, I think we're coming out of that chasm, it feels like, and at an inflection point. And if we can get the things right that we think we need to do over the course of the next 12, 18, 24 months, then, you know, why not? The world's kind of our oyster. And that's why, you know, maybe sounds a bit morbid, but it's almost nice knowing that if you get it wrong, you die, or if you get it right, you scale. It's a bit more binary than, you know, what Elon Musk says, which is eating glass and staring into the abyss. because it's certainly been like that. And, you know, the lows of startup life are super low, but the highs are really high. And so you're just kind of chasing that like an addict, I guess. But there's a real opportunity to scale it. So let's give it a shot.
I think that, to be honest, I was shocked. I have a lot of respect is that you guys were able to sustain this company for 6 years, and knowing that you guys are trying to find and right now getting some sort of bigger and bigger traction only on in your like past couple of years, I assume, right? I think co-founder relationship is very important thing, right? Especially when the things are boring and not going, when the things are not gaining momentum that you guys are expected to gain. And you already mentioned that you started initially as a team of three, and right now it's team of 2 co-founders, right, who are actively working in the startup. And in general, I think what we are very curious in general as a people who want to start companies, how to manage co-founder relationship, how to find the right person. And as you have been in different stages throughout 6 years, and fall out of like one co-founder as an active team member, I'm just curious, what have you learned about like co-founder relationship to sustain and to be as like livable, essentially, because it's not the ones who are the strongest in the moment, the ones who actually survive probably will make it, right? It's not essentially the tech, but the survival that matters. So I'm just curious, how did you guys survive? And how did your relationship survive throughout? Because from what I understood, you started playing football and you were friends and not necessarily co-founders initially.
Yeah, and I think like, especially Isa and I, there's just like an ease of that relationship, I guess, on the football pitch that translated a bit more maybe. You play football together every day or a few times a week for 3 years, and you get a good sense of kind of what that person's like. But no, it's definitely not always easy, and there's definitely instances in which Isa and I will like argue, right? But I think what Isa and I managed to do quite well, and Isa mentioned Jamie, our kind of lead data scientist, also went to Imperial. He was my flatmate at university, my roommate. What we've tried to do is just separate, you know, hey, this is a friendship thing and this is a business thing. And so I can still have a moan at, I'll put Jamie on blast here. He gave me a day's notice that he was taking holiday when our policy is 2 weeks. And so I can still moan at him and say, that's not how we do this as a boss. But I can then see him on Saturday night and, you know, still have a drink and have fun. And like striking that balance isn't always necessary. Like it can be a professional working relationship with the co-founder, I think, or anyone in the team. So I wouldn't I think a lot of people say like, don't go into business with your friends or family. And I think we've had like multiple different experiences with that. I actually helped my mum run her business kind of on the side. And that's been okay. Like running business with Isa has been great. We definitely had some challenges in the relationship with the third co-founder that, you know, we've kind of worked through and come to a conclusion on. But I think that the difference was like how transparent we were, and accountability being the kind of key factor in that. Because if Isa turns around and says, you said you were going to get this thing done and it's not done, that's not a personal attack. That's you know, we need this thing done to move the needle in the business, and you haven't done it. But it's not a, why haven't you done this? It's a, you know, look, we need to get this done. If there's stuff I can do to help you, I'll do it. If not, you know, you do need to get your shit done. And it's not easy to have those conversations if you don't have the right kind of relationship set up. So we got this advice early on and probably didn't take it very, or didn't implement it very well. But when times are good, have the really tough conversations about when things could be really bad, because that's when you're going to be the most malleable, the most agreeable, the most kind of open with that conversation. It's when you hit the lows or the really boring times or something's just hit the fan or a client's pulled out. You know, we had an investor pull out like over 200K the day before we were supposed to sign a deal. That's when things get really tense, and you don't want to be having the resolution conversations while that shit's going down, because no one's in the right mindset. And thankfully, I think, just Isa and I were open enough for one another and don't take those things kind of personally, that we've been able to make that work. I don't know, Isa, if you feel any differently or want to add something.
Yeah, I mean, I agree. I think for us, I think the key's been really separate that business and kind of friendship, and know that if I say something to him, it's purely business related, and I'm not attacking him personally. This is us trying to further the business. And to his point, you know, we can argue 1 second, and right after work we're going out to spend the rest of the time together. So it's not really, we've learned not to take these things personally. And also you learn that in football as well. You know, someone does something on the pitch, you're like, hey, you should have passed me the ball. And it's all normal things that you learn to moan at each other and just get on with it. It's not moaning, we're just trying to be better for the team. And as long as we all see it that way, we're all kind of in a positive mindset. And to Will's point, in terms of getting it right from the beginning, I think you definitely resonate with that. I think getting a good co-founders agreement in place is very important, because, and also I think having someone that holds you as co-founders accountable. If it's just two of you, it's very hard, because it's just two perspectives. One can say one thing, the other can say the other thing, and you just kind of butt heads. Having three of us was a bit helpful. You can have a majority where two people say yes and the other one says no, so you can have a majority to mold things. But still, I think you need someone outside the co-founders who is kind of unbiased and can hold all of you accountable and say, actually, I don't think what either of you is saying is correct, and I think this. So having that outside perspective, also helps, because sometimes when you work so closely with each other, you're just like, he only thinks this because this, or, because you're working so close. So you really need fresh eyes sometimes to help you break out certain mental patterns, and to help you guys accurately reflect on each other and what's going on. So I think for me, those things are really important, and being able to hold each other accountable and to the same standard as co-founders. I mean, a lot of people, tricky co-founder relationships always form if there is some sort of misweighting. If one person has kind of other standards that they're held to, and this one is held to different standards, that never really works out well. So, having the same standards for each other, holding each other accountable, and making sure that there's someone who, from outside, unbiased, who can input to help in situations is very helpful.
I'll tell you what's definitely been not a challenge, but kind of a fun thing to observe is like how those standards increase over time. So like our standards when we were, just starting the business 2018 are very, very different to where they are today, as you'd hope. But what's uncomfortable, and Isa talks about mental patterns a little bit, is like breaking that and saying, actually, this isn't our standard anymore, it's this. And so that piece of work you just did and spent a lot of time on that would have been good enough 6 months ago actually isn't anymore. And that needs to level up. And so I think that goes to, and something we haven't mentioned yet, is just like values, your common values. And I think Isa and I, although very different backgrounds, and most of our team and our investors share very, very similar values in life and how they treat people. And and I think that culminates in just not having like the same way of thinking, but your fundamentals are the same. So in that standards example, it's our values are that we're constantly striving to be better. And so there's never a conversation of, actually, no, this standard's fine. Because we both know that really we should be aiming up here somewhere anyway. So, even the new standard we're saying is probably not going to be good enough in 6 months' time. So I think that's an interesting one, and I think something that if you're a founder or you want to be a founder, and you're looking for co-founders, aligning on those values and how you tease those out, I guess is up for debate. But aligning on those on your core values is really important. Whether or not you think in the same way about certain things, Isa and I will disagree on many a topic. Especially with Arsenal and Liverpool playing each other tomorrow. But fundamental core values are the same. Liverpool will win. But hey.
Well, one thing that you have mentioned I still can't really take off my mind is having hard conversations during the peacetime so that you can go through the war times together. What are three hard conversations that Will and Isa you would suggest co-founders to have?
Equity split.
Equity split.
Straight away.
That's what I'd say is what happens, like good and bad leaver, what happens when the founder wants to leave or, wants to leave or has to leave. There are two different scenarios. Either a founder's come to the point where they're tired and they want to walk away, or due to some disagreements internally, people think that one founder should leave. So I think when times are good, that is definitely the best time to have that conversation as to what happens when a founder has to leave the business in all scenarios. And I think signing those legal documents early on is very important.
Yeah, I'd agree with that. So it's good leaver, bad leaver conversations. The actual equity split in the first instance, if you're all there on day zero, just drop your ego and split it equally. Like that is the best route and what's going to make investors most comfortable. And again, like if you need to reweight that or someone leaves, that should be built in and you can deal with it with like option schemes and things.
It's a tough one. What would be a good third?
Vesting as well would be a good one. But I guess that's kind of part like default.
Yeah, I'm trying to get away from just like purely the equity stuff, I guess. Like there's so much more to running a business with one another than just having an equity conversation. But it's hard to preempt that. Like you never know what the really shit bits are going to be. So maybe having just a structure in place as to like how you're going to speak to each other when things get really tough. And actually maybe something that, Isa and I usually just like grab dinner and have those conversations. But if it's more of a working professional relationship, I think maybe having a structure in place would be a good thing, and say, look, if the business or as us as individuals are facing challenges, we're going to work through this framework and we're just going to agree that framework between us so that we're all comfortable with it. And this is how we're going to approach a debate so that it's completely as non-biased as it can get. It's not personal. It's about how do we optimize for business's success. And we definitely did a lot of that as well. It's not really a game. I guess we do this workshop style thing where everyone kind of jots their ideas down, puts them up on a board. We kind of bucket them into different categories. And then everyone except the person who wrote that item gets to debate on the efficacy of that thing. I mean, we do this for product, we do this for sales, everything, which is a nice little exercise. So things like that, I think would be, it's not just all about your equity stake, but from a founder's agreement perspective, definitely the things that Isa spoke about.
Nice. Yeah, I think it's really good kind of advices. I think we can wrap up the podcast, and our traditional question at the end of the podcast is to both of you, like what kind of advice you would give to the young people who are just starting their journey?
Tough one. I think, this is a tough one. There's many pieces of advice, but I think the number one thing, I think you have to just go for it, put yourself out there. When we started this business, we literally had more than one development company team because I was still learning to code then and I couldn't do much at that point. But we literally had more than one development company team tell us that what we were trying to do was impossible. We heard the word impossible many times, but we still managed to pursue it, and we've gone and done it. So I'd say take that leap of faith. If you want to start something, you have to take a leap of faith, unless it's never gonna come about. So yeah, if you don't start, you'll never finish. So just go take that leap of faith is my one piece of advice, because from what I see, especially in this climate, you know, people are very hesitant to start their own thing because of how it's you know, the cost of living crisis is tough to get by, and you know, people have this great idea of startups making you a lot of money, but it's a lot of hard work. We've gone a lot of time unpaid, and having to just live off the bare minimal. So yeah, it's a tough journey, but if you're not willing to face that hardship and grind through it, then it's probably not a place for you. So
yeah, I'd agree with that. Definitely try and make the most of it as well, like have fun doing it. But yeah, I think something I probably preach and don't practice as much is like it's not that deep. Like it's not the end of the world. It's never gonna, the highs, like I talked about the lows being low, the highs being high before, but they're never as low as you think, and they're never as high as you think. And finding kind of that mindfulness and having that even keel of things are going well right now, but that's not everything in my life. Things aren't going so well right now, and that's not the end of the world, is a really important thing. And I think those who are level-headed and down to earth about that tend to be just more enjoyable people to do business with, and tend to be a bit more successful in that. That's purely my thoughts. I don't have any data to back that up. Yeah, so you know, try and find that even keel. But to Isa's point, I think Isa's is probably more pertinent for someone starting, which is to like go get it, put yourself out there, and just really like don't put one foot in the water. Just, if you're gonna jump.
That's a really good point to end our podcast. I hope our listeners who were on the border, on the brink of starting and jumping, will be able to jump after this podcast. Will and Isa, for me personally, was truly inspiring story. I really hope to learn to be as resilient as you guys, and truly honestly have a lot of respect for the fact that you were able to sustain for 6 years. And I really hope that you're able to achieve this momentum of growth and go from 1 to 100, and hopefully become a company that will start acquiring a lot of smaller startups and not be the one to get acquired. But even if you're getting acquired, I really hope that you guys achieve your goals. Yeah.
Nice one. Thank you.
Thank you very much for listening to us. Please subscribe and like. I will leave LinkedIn of both Will and Isa. Feel free to connect with them. And yeah.
Thanks, folks. Thank you for having us.
Thank you very much for having us.
Goodbye.
Take care.